Thank you, everybody, for joining us today for this latest in my crypto webinar series regarding cryptos and regulation. You know, this has been such a crazy year in cryptos. We started this year off. I probably attended 4 or 5 conferences myself. I know Aaron has attended a ton. You know, it seems like the narrative's changed so much since the beginning of the year. We started off, you know, really gung-ho, the market's doing well. Then we kind of hit this period over the summer where we saw some defaults. And then as the end of the year rolled in, things got a little scarier as well. You know, and we have a lot of questions regarding regulation, investor protection. Perceptions definitely seem to have changed. They've changed very, very fast, especially with regulation. And more so, something we're going to talk about today is trust in this market. And what we've learned this in the past basically 6 months, and what companies are planning on doing moving forward. So I'm really happy today. Joining me for this session is founder and co-CEO of Prometheum, Aaron Kaplan, to help us discuss the current state of crypto regulation. Before we get started, Aaron, first, thank you for coming. Before we get started, just tell me a little bit about yourself and Prometheum so we have a little background.
Sure. Mike, thank you so much for having me. By background, I'm a securities attorney, and I got into the what I would call the blockchain or crypto space in 2013. In April 2014, I believe that's the date, we wrote a no-action letter to the SEC, basically asking them to allow us to transact Bitcoin through a brokerage account through an ATS. Obviously, that wasn't how things played out, but since then, I participated in the space. I focused my practice on the application of crypto and blockchain into the regulatory universe and the related regulatory issues that arose from that. And when the Dow report came out in July 2017, which was really the first time that the SEC said that digital assets, or called cryptos, were potentially securities, we started Prometheum. And Prometheum creates the public market and custodial infrastructure used by its subsidiaries, Prometheum ATS and Prometheum Capital. Prometheum ATS is licensed as an alternative trading system under the securities laws to publicly trade digital asset securities. And Prometheum Capital is in the process of becoming a special purpose broker-dealer, which will allow us to settle the digital asset security transactions that occur on the ATS and custody the digital asset securities that are traded on the ATS. So basically, we provide a regulated venue under the securities laws, meaning Prometheum ATS, where you can publicly trade digital asset securities, and hopefully we intend to be vertically integrated quite soon with our subsidiary Prometheum Capital to be able to custody and settle the digital asset transactions that occur on the ATS.
Sounds easy. So I don't know what all the fuss is out there with regulation. But listen, you and I spoke several times, and I think the main takeaway, and one of the themes that every time we speak is regulation does not have to kill innovation. Right? And I think that's something that we're going to try to get into here a little bit. So we've heard a lot of calls for regulatory clarity, and you're in big trouble because all the time we spoke, I have a ton of questions written down here. But I have a question for you. You know, am I being naive, or it seems like the legislation, the rules we have right now can work in this asset class? So what's your opinion on this? Is something new that needs to be developed, or can we kind of use what the rules that we have right now?
It's been our thesis since 2013 that the federal securities laws were the best framework to regulate, at the time, Bitcoin, and then, you know, ETH and its progeny, but any sort of digital asset, because they're tried and tested over 90 plus years, and there's no need to recreate the wheel. They're meant to protect investors, to ensure fair and orderly markets, and that basically customers' assets are properly segregated, protected, and secured. So in my opinion, the federal securities laws are the best framework as is to regulate digital asset securities. And what we've seen is that people who argue for new regulation, or that there's a lack of regulatory clarity, or that regulation kills innovation, are the people who are best served by that. They're not the people, they basically need new regulation because there's a lot of skeletons in those clauses.
But you don't think we do?
Absolutely not.
And if we employ the regulation that's out there right now, is that going to bring back the trust that we've lost this year in the crypto markets?
So what we've seen is that the existing Wild West crypto financial services infrastructure, we're seeing its demise. And that's a result of runaway innovation without regulation. And in crypto in general, the only area where there's major problems is the financial services providers, who thought that they could operate in gray areas, or basically outside the law or outside regulatory norms. And we're seeing the results of that now. But what we're also seeing is that this crypto financial services infrastructure is going to be replaced by a regulated financial services infrastructure under the securities.
They're getting married.
Yeah, exactly.
We talked about that. So when you talk about this crypto contagion, I almost hate to use that word contagion. Do we really need a code of conduct? Or, I mean, any kind of new legislation seems like it's going to take too long to implement. So what needs to be done right now?
The application of the federal securities laws, the registration and licensing of financial intermediaries in the crypto space under the securities laws. I feel like I'm just spouting what Chairman Gensler has said.
Right.
And if you follow what the SEC has said since July 2017, when the Dow report came out, they have made it clear that many digital assets are securities, that many of the financial intermediaries, almost all of them, have to register under the securities laws. And if they've really made clear as the way to achieve compliance, where people argue that there's regulatory ambiguity, it's not true. They've laid out the methodology by which you can trade digital asset securities under the 3-step release and how you can custody digital asset securities under the special purpose broker-dealer release. So I think if you follow what the SEC has said, you follow their releases, basically you can achieve compliance.
You slipped that in there a few times, and I can't let it sneak away. Special purpose broker-dealer license. We talk about that a little bit?
Sure. So the special purpose broker-dealer is the federal license. It's the securities license to become a custodian that could custody digital asset securities. Now, there's a couple of nuances there. One, what's a digital asset security? In my opinion, almost every crypto, besides for Bitcoin maybe, is a security. Therefore, that governs the custody of all those assets besides for Bitcoin.
Fair.
And two, beyond that, what we're seeing is that it's the end of the era of state custodians. What we saw initially is that custodians licensed to custody crypto, right, not under the securities laws, were licensed on a state level. This is going to move to a federal level. There is a requirement, or it's needed that essentially there's a uniformity as to how custody is regulated, and basically there's the ability to enforce and the enforcement mechanism to ensure that people are complying with those regulations. And that's what the SEC provides.
Now, just to get a little gray, you talk about federal, you talk about, U.S. This exchange is all over the world, that being governed very differently. So how do we do this in a global manner, in a macro manner?
The argument that crypto or digital assets or all these activities were outside of existing regulation was nonsense. They've always been regulated financial services. They've always been regulated securities. And essentially what we're going to see worldwide is the application of the securities laws to that localized entity, that localized jurisdiction. And we're already seeing it. I believe there was news last week of maybe Thailand or other Asian countries coming out with applying the securities laws to digital asset activities.
But is it plug and play, or is it going to be a new oversight committee from Washington, or something extra that needs to be clarified?
It's probably in between. Most likely plug and play. The rules are established. There's methodologies for this. Essentially, each jurisdiction will have to decide how they want to license these virtual currency exchanges. I know that in Hong Kong, the SFC, I believe, which is the regulator, I believe that's it, essentially requires virtual currency exchanges to register under the securities laws there. Chairman Gensler has said that intermediaries in the United States provide, particularly virtual currency exchanges, a custodian should register under the securities laws. And what we're going to see is that play out over the next quarter or two.
Right. And we talked about, you mentioned it a few times too, and a lot of people have different theories around, is Bitcoin a clear commodity? Is it a security? Is it, you and I spoke last week. We argued that it could potentially be a currency. When is that going to officially come out? That everything else is security? Because everyone's got their views, but no one's actually saying out there in public from an official standpoint that everything is a security.
I think this goes to the whole concept of regulation by enforcement. Regulation.
That's a scary topic, right?
But it's the cliche used by people who don't understand regulation. Regulation always works as that enforcement is sort of the case law and the precedent set. And to wait for new legislation on any front
takes forever.
And it serves the people who are operating in the gray areas right now.
Yeah.
Because they're operating outside the law, they get to continue doing this such. They say, we don't know what we're doing, which is not true. And essentially, they get to benefit arguably at the expense of their customers.
How far are we away from an official designation from government? Everyone's got their views. Everyone's got, you talk about Gensler, but when is it going to be official? Next week? 3 years from now?
Some people might argue that it became official with the library decision, which basically has very similar fact patterns to what's going on with Ripple. and I think has established a precedent that will play out in the Ripple case.
Right.
I don't know if it's because the LBC token was much smaller, so people didn't pay as much attention. But if the same course of events occurs when it comes to Ripple, is that going to be the line of demarcation?
Right.
And the one thing I would note is that the SEC is undefeated in these cases.
You brought that up the last time, but it was kind of an interesting point. When we talk about regulation, we can go back 2 or 3 years when this became more mainstream, more popular. Not too much has changed. Regulation is pretty much the same. 2 years from today, is things going to be exactly the same as they are now, or do you have any? How is regulation going to be different? Are we going to see institutional investors being able to embrace this?
Yes, I'm confident in that for multiple reasons. One, it's very difficult for a traditional financial institution to integrate with a virtual currency exchange. From a compliance perspective, it's apples and oranges. But what we've seen with the recent debacles is that the mentality has changed. And the industry, if you're seeing the most recent quotes coming out of Davos and such, is saying, there needs to be regulation in order for the industry to move forward. There needs to be regulation. We need to be compliant under the laws, and it's been a paradigm shift in the mindset there.
Sure.
And in my opinion, many executives at major virtual currency companies see the writing on the wall. They're not obtuse. They're just trying to figure out how to evolve, because if they don't evolve, they're going to die. And evolution requires, how do you figure out how your existing systems can be compliant under the securities laws? How do you update them? Does it require a total rebuild? And while I think it might be difficult for certain people who operate like that, particularly because there's a lack of compartmentalization between elements within a business, between the trading component, between the custody component, between the banking services component, they're all operating under one house. And how do you unwind these things?
Right.
So I think it will be difficult for many of the existing players, but the ones who will figure it out will be able to evolve, and if not, they'll die.
So taking that a step further, what concerns investors and regulators even more so is it the actual life cycle of the trade that you spoke about, or is it really blockchain technology and how that may disrupt our current ecosystem in the financial world?
So there's two components to this. First is the life cycle to the trade. Essentially, what concerns, at least my understanding, regulators from that standpoint, is that people need to be compliant under the securities laws. There needs to be a asset issued properly. It needs to be traded properly to make sure there's no wash trades. And there's been recent reports that 50 to 70% of trades on virtual currency exchange are wash trades, which is the fair and orderly component. And then to ensure that customers' assets are properly secured, segregated, and custody.
Yep.
Now, on the other side of that, you have the implementation of distributed architectures and blockchain technology into the existing market infrastructure. There's clear benefits to that. I don't think anyone who actually understands the technology there questions it, obviously with settlement and with data and then record keeping, et cetera, et cetera. But it's just a question of making sure regulators feel comfortable with that, which I think they do much more now than they did previously.
That's fair. One thing you mentioned there was that you mentioned the trading venue. What are institutional investors looking for so they can turn the switch on and get involved? Outside of trust, because we talked about trust, but what needs to be done? And you mentioned rules by enforcement. No one wants to get caught on the other side of that on that trade, right? So what needs to be done, like right now, that where institutional investors can get involved in this space and feel safe, that they're not going to have to pay a fine, that they're dealing with trusted counterparties, right? Because let's face it, at the beginning of the year, everyone thought they were dealing with trusted counterparties, and look where we are now. Completely different place, right?
Well, I think that's what happens when you're dealing with a self-regulating industry from their perspective. Now, I think what institutional investors are looking for, and I think what will lead to the next wave of institutional adoption, is the properly licensed trading venues under the securities laws. They can ensure that those markets have integrity and that there's not a series of layering and wash trades that are just manipulating the hell out of it. Now, beyond that, the trust, which I know we don't want to focus about, but any sort of regulated financial institution has to think, what happens when I trade in this venue and where's my assets custodied? And are those assets custodied such that in the event of some sort of black swan event, I become a general creditor?
Right.
Which is not what happens under the securities laws. Right. It's just not. It should be virtually impossible because you never know what can happen on a fringe case, but it is very improbable. And the event where under the securities laws, under particularly Rule 15C33, which is the customer protection rule, customers' assets have to be properly segregated from that of the institution, such that if the institution goes under, those customers are protected. And if the industry had followed those rules and those standards, I don't think we would have seen a lot of the events we've seen over the last few quarters. Beyond that, there would have been the enforcement mechanism to have the oversight necessary to make sure it couldn't have happened.
Right. And I think that was one of the things that I think a lot of the investors weren't really educated on. When you talk about individual investors, right, they really weren't educated on that custody stuff you're talking about. And I think that's why you're seeing a lot of assets move to cold storage or different venues now. But talking about custody, what should best practices look like? I'm a big institutional investor. I want to do this properly. I want to do this within the guidelines of regulation. How do I custody my assets properly? Or more importantly, my clients' assets properly, right?
Exactly, because what happens, you're the intermediary. If your client's assets aren't custodied properly, you're left and you're exposed. And in my opinion while there's not one yet, and hopefully we will be the first, is to properly custody your assets at a special purpose broker-dealer licensed under the federal securities laws. It ensures the investor protections and the requirements that have been tried and tested in market infrastructure over 90 years or so. And that's in my opinion, the best way to ensure that your assets are properly protected, that they're properly segregated, and that you're going to deal with fair and orderly markets on the trading side. Most people, they don't necessarily need to focus on how market infrastructure works. They need to focus on how to mitigate.
No one knows how the internet works.
Exactly. They need to focus on having a proper venue to trade and how to mitigate their risk when it comes to where the venue they're custodying their assets. Right. And I think that's what the licensed entities under the federal securities laws will provide.
Can regulation and governments bring back trust? Or is it going to take some time?
The industry's relationship with retail investors, in my opinion, is damaged because of the excesses, the lack of risk management procedures, the lack of normal business practices.
Right.
I mean,
so outside of regulation, there should be some kind of code of conduct.
Interesting. Certain insurance agents, like industries, when they're selling pharmaceuticals, they wanted to regulate themselves. Right. And I don't know if that worked out well, how that played out. I think that there's established self-regulatory organizations with FINRA in the industry, and compliance under the federal securities laws will ensure the best route forward to rebuilding that trust. Right. And ensuring that markets are fair and orderly. And I know I'm being repetitive here, but ensuring that investors are actually protected, that there's proper disclosure, and ensuring that when an asset is custodied, it's separate from the firm. Right? What we've seen is that a lot of the major players use their customers' assets as if it was their piggy bank. Yeah. And commingling of customer funds and assets in the securities industry, that's jail time. Like that's
frowned upon?
A little bit.
Well, Aaron, this is a great conversation. I really appreciate your time. I do have a bunch of questions that came up here. And listen, if we didn't get you a question, please, I know there's a question tab at the top right here. Please click on that. If you have any questions for Bloomberg or Bloomberg's offering in this space, what Aaron and his firm are doing in this space, please click on that tab. We are more than happy to follow up with you. But one of the ones that popped up there, and it popped up more than once, is twice. And I think I'm not sure if you touched upon it. What is the difference between an ATS and a current exchange? Like, what is that? What's the differentiation there?
Many virtual currency exchanges operate on either regulatory arbitrage or jurisdiction shopping. With jurisdiction shopping, I would say that they choose a jurisdiction that's best for their business, arguably at the expense of their customers. We've seen people in the Bahamas and the Caymans, but beyond that, virtual currency exchanges in the United States are licensed as money service bureaus under the money transmitter laws, and in my opinion have the same licensure as Western Union and MoneyGram. And I don't think that that's the best way to regulate or to oversee or to have enforcement mechanisms to make sure that it's all kosher, for lack of a better term. Right. And that's virtual currency exchange in the United States. But an ATS is an alternative trading system, basically licensed under the securities laws, which Prometheum ATS is, to publicly trade digital asset securities. And I think it's the next step in this whole process because it ensures the proper trading and the proper protections and everything else to ensure that the trading is actually legit.
Right.
When there's 70% wash trades and people are sitting on both sides of those trades, that's not a real market. Right. That's a highly manipulated market. So I think what we're seeing in this evolution is a forced maturity, because imposition of the federal securities laws and actually application in a hard sense will ensure that all of these nonsense activities are over.
Right.
And that basically, I think it's really what's required in order to end the crypto winter. And it's a super ironic thing, because you said that people made the argument forever that regulation kills innovation. But what ended up happening is that innovation ran away. Innovation, right? Trading systems. But ran away, and they almost destroyed an entire market. And the way that there's going to be some sort of a resurrection or redemption here is through the application of regulation. So essentially, regulation is actually going to save innovation, which is a great irony if you've been in this industry for 5-7 years or so.
Yeah, I'm getting a little nervous. I might need a law degree to understand all this stuff now. So.
I apologize. The legalese, the blockchain terminology.
It's great, and there's just so much to be learned in this space. And I think once some trust gets rebuilt and we start to move in the right direction, it's going to be a great asset class to make people feel a little more comfortable once again. Aaron, I appreciate your time. Sure, thanks for coming in today. Once again, everybody, thank you for joining this webinar. If you have any ideas or other topics for new webinars that you'd like to see this year, please let me know. In addition, don't forget to hit that question tab if it's anything that Bloomberg or Prometheum can follow up on. Otherwise, I look forward to seeing everybody again soon. Thank you again.